The numbers are jaw-dropping. $250 billion gone. But behind that headline lies a deeper unraveling. Inside Tesla and SpaceX, the silence says more than any press release. Fear is taking hold, jobs no longer feel secure, and confidence is slipping away. Investors, once willing to ride the highs and lows of Musk's unpredictable leadership, are beginning to question whether the risk still matches the reward. Stock prices continue to stumble. Key decisions are raising eyebrows. And beneath it all, panic begins to simmer. We're about to break down what's fueling this historic collapse, how it's impacting daily operations inside Musk's companies, and what could happen next as this business drama continues to unfold. Tesla's stock decline. Tesla's stock has been on a wild roller coaster ride, but lately, that ride has been mostly downhill. Since the beginning of the year, Tesla's share price has dropped by more than 40%. This huge fall has caused Elon Musk, the company's famous CEO, to lose around $250 billion of his personal wealth. So what's causing Tesla's stock to crash? Several big problems have piled up all at once. First, the electric car market isn't growing as quickly as everyone thought it would. Many people who were excited about electric cars have already bought them, and now companies like Tesla need to convince regular car buyers to make the switch. Competition is another major issue. A few years ago, Tesla was pretty much the only company making cool electric cars. Now, almost every car company in the world has their own electric vehicles. Chinese companies like BYD are making cheaper electric cars that many people can afford, while luxury brands like Mercedes and BMW are creating fancy electric cars for wealthy customers. China has become a particularly tough spot for Tesla. The Chinese government recently placed new tariffs on cars imported from the United States, making Teslas more expensive for Chinese buyers. At the same time, Chinese car companies are starting to sell their electric vehicles in Europe and other markets where Tesla used to dominate. Tesla's production numbers aren't helping either. In the first 3 months of 2024, Tesla delivered 386,810 vehicles, which sounds like a lot, but was actually 8.5% fewer than the same time last year. This was the first time in 4 years that Tesla's deliveries decreased compared to the previous year. Investors are also worried about Elon Musk himself. He's been spending a lot of time on his other companies like SpaceX and X, formerly Twitter, and some people think he's not focused enough on fixing Tesla's problems. Musk has also been involved in political arguments on social media, which has made some Tesla customers unhappy. The company's newest products haven't excited investors as much as expected. The Cybertruck finally started shipping after years of delays, but it's expensive to make and hasn't sold in huge numbers yet. Tesla's robot taxi and humanoid robot projects sound exciting, but they're still years away from making money for the company. All these problems have caused many investors to sell their Tesla shares. Some big investment firms have lowered their price targets for Tesla stock, suggesting they don't think the company will bounce back quickly. Inside Tesla, employees are worried. The company has already gone through several rounds of layoffs, cutting thousands of jobs. Workers are concerned about their job security and whether their stock options, which many Tesla employees receive as part of their pay, will ever be worth much again. For a company that was once worth more than $1 trillion and was one of the stock market's biggest success stories, this decline has been shocking. While Tesla still has loyal fans and innovative technology, the road ahead looks much bumpier than it did just a year ago. But the turbulence doesn't stop with Tesla. As Musk's financial empire takes a hit, the shockwaves reach even further into the heart of SpaceX. Impact on SpaceX. While Tesla's stock took a nosedive, SpaceX wasn't immune to the ripple effects of Elon Musk's financial troubles. SpaceX, Musk's private rocket company, faced its own set of challenges as its founder's wealth shrank by $250 billion. Unlike Tesla, SpaceX isn't a publicly traded company, which means regular people can't buy shares on the stock market. Instead, SpaceX relies on private investors and funding rounds to raise money for its ambitious space projects. When Musk's personal wealth dropped, potential investors started having second thoughts about putting their money into his space venture. SpaceX had been working on several major projects that required huge amounts of cash. The Starship rocket program, designed to eventually take humans to Mars, needed billions of dollars to continue development. The Starlink satellite internet service, which aims to provide internet access worldwide through thousands of small satellites, also demanded massive ongoing investment. With Musk's financial situation looking shaky, SpaceX had to slow down some of these projects. The company pushed back several planned Starship test launches and reduced the production production rate of Starlink satellites. Engineers and technicians who had been working overtime suddenly found their hours cut, and some contractors weren't called back. At SpaceX headquarters in Hawthorne, California, managers scrambled to prioritize which projects would continue at full speed and which would need to be scaled back. The company's plans to send private citizens around the moon and establish a permanent base on Mars were delayed by several years. The financial squeeze also affected SpaceX's relationship with NASA. While the space agency continued its contracts with SpaceX for International Space Station resupply missions and astronaut transportation, discussions about future partnerships became more complicated. NASA officials privately expressed concerns about SpaceX's long-term stability. SpaceX had to get creative with its finances. The company raised the price of Starlink subscriptions and looked for new government contracts that could bring in steady income. Musk even considered selling some of his personal SpaceX shares to other investors, something he had been reluctant to do in the past. Employees felt the pressure too. The company froze hiring for non-essential positions and paused its usual year-end bonuses. Some workers who had joined SpaceX because of its exciting mission began updating their resumes, worried about the company's future. Despite these challenges, SpaceX still had some advantages. The company had already established itself as a reliable launch provider with its Falcon 9 rockets, which continued to generate revenue through commercial and government launches. SpaceX also had a significant head start over competitors in the commercial space industry. Musk tried to reassure his space team that the financial troubles were temporary. He pointed to SpaceX's successful track record and argued that the company's long-term vision remained unchanged. In meetings, he emphasized that humanity's future as a multi-planetary species was too important to abandon because of short-term money problems. The situation highlighted how interconnected Musk's companies really were. When Tesla struggled, it affected his ability to support SpaceX, and if SpaceX faltered, it could damage confidence in his other ventures. For a man who had built an empire on big dreams and investor confidence, this interconnectedness became both a strength and a vulnerability during times of financial stress. But what happens when the pressure from the top starts to seep into the halls of the companies themselves? Internal panic within Tesla and SpaceX. Inside the walls of Tesla and SpaceX, the mood has changed dramatically. Employees who once proudly wore company t-shirts and talked excitedly about changing the world now gather in small groups, whispering about their concerns. The $250 billion drop in Elon Musk's wealth hasn't just affected him. It's sent waves of worry through thousands of workers who depend on these companies for their jobs. At Tesla's factory in Fremont, California, assembly line workers check their phones during breaks, scrolling through news about falling stock prices. "We used to feel untouchable," says one engineer who asked not to be named. Now everyone's wondering if their job is safe. The anxiety isn't just on the factory floor. In Tesla's offices, managers try to keep teams focused on upcoming car models and battery improvements, but meetings often drift to questions about the company's future. Some employees have started updating their resumes just in case. At SpaceX headquarters in Hawthorne, rocket scientists and engineers face similar worries. The company that once seemed destined to put humans on Mars now faces questions about funding for its ambitious Starship program. "We came here to make history," a SpaceX software developer explains, "but now we're worried about making payroll." The uncertainty has affected productivity. Projects that once moved at Elon's speed have slowed as teams spend time discussing what might happen next. Attendance at optional company events has dropped, and the once famous all-night work sessions have become less common. Some employees have taken to social media to defend their companies, while others have quietly removed Tesla and SpaceX from their profiles. Company chat groups buzz with questions that managers can't always answer. Tesla's sales team faces particular pressure. With car orders slowing and competition increasing, they're working harder for fewer results. "We used to sell cars almost without trying," admits a Tesla sales advisor. "Now customers ask tough questions about the company's stability." Now, the employee stock purchase program, once a major perk at both companies, has lost its appeal as stock prices tumble. Many workers who counted on stock options for their financial future now face difficult choices about their savings and retirement plans. Human resources departments at both companies report increased requests for one-on-one meetings. They've started holding special sessions to answer questions and calm fears, but attendance has been mixed. Some employees don't want to be seen as worried about the company's future. Despite the concerns, many employees remain loyal. "Elon has pulled off the impossible before," says a Tesla battery researcher. "A lot of us still believe he'll figure this out too." Both companies have seen some key talent leave for competitors, but most employees are waiting to see what happens next. They watch Musk's social media posts carefully, looking for clues about their future. For now, the hallways and break rooms at Tesla and SpaceX remain filled with a mix of worry, hope, and uncertainty, emotions that would have seemed impossible just a year ago when both companies seemed unstoppable. Elon Musk's response. As the financial storm hit Tesla and SpaceX, Elon Musk didn't hide away. Instead, he jumped into action with his usual bold style. When faced with the massive $250 billion loss, Musk first took to Twitter, now called X, to address worried investors and employees. Temporary setbacks are just that, temporary. Musk posted at 3 a.m., showing his around-the-clock work habits. Tesla and SpaceX have overcome bigger challenges before. Unlike many business leaders who might hire PR teams to craft careful messages, Musk handled the situation his own way. He scheduled an emergency meeting with Tesla's board of directors and top SpaceX engineers to create a recovery plan. During this meeting, which reportedly lasted over 12 hours, Musk outlined several key strategies. First, Musk announced a pause on hiring at both companies, except for critical engineering positions. He also temporarily cut his own salary to just $1, a move he had made in previous tough times. This symbolic gesture aimed to show he was willing to share in the sacrifice. For Tesla specifically, Musk pushed forward the release date of the company's new affordable model, hoping to boost sales and investor confidence. He also ordered a review of all production costs, looking for ways to make manufacturing more efficient without cutting quality. At SpaceX, Musk shifted focus to the most profitable contracts, particularly those with NASA and the Department of Defense. He also accelerated the Starlink satellite internet service rollout, which was already bringing in steady revenue. In a company-wide email that later leaked to the press, Musk wrote, "We're going to work harder and smarter than ever before. This isn't the first time people have counted us out, and it won't be the last time we prove them wrong." Musk also made some surprising moves that caught attention. He sold his last remaining house in California, explaining that he wanted to put more of his personal wealth into his companies. This move generated headlines and showed his personal commitment. On social media, Musk maintained an unusually positive tone, sharing updates about successful rocket tests and new Tesla features. He avoided directly mentioning the financial loss, instead focusing on future goals and achievements. When asked about the situation during a rare interview with CNBC, Musk said, "Every great company faces dark moments. What matters is how you respond to them. We're building companies that will change humanity's future. That's never been an easy path." Behind the scenes, Musk reportedly worked 20-hour days, sleeping on couches at both Tesla and SpaceX facilities. Employees described seeing him in the same clothes for days, reviewing designs and financial reports. By the end of the month following the financial loss, Musk had announced a restructuring plan that would cut costs by 15% while preserving core research and development teams. He also secured new funding from longtime investors who still believed in his vision. Whether these efforts will be enough to turn things around remains to be seen, but one thing is clear: Elon Musk is responding to this crisis the same way he's approached other challenges, head-on, with confidence, and without following the traditional corporate playbook. External factors and challenges. The $250 billion loss hitting Tesla and SpaceX wasn't just about decisions made inside the companies. Many outside forces played a big role in creating this perfect storm of problems. One of the biggest challenges came from the government. New tariffs, extra taxes on products coming into the country, hit Tesla especially hard. The company gets many car parts from overseas, and these new taxes made everything more expensive. For a company already watching every dollar, these extra costs came at the worst possible time. Competition also ramped up in both the electric car and space industries. Traditional car companies like Ford, GM, and Volkswagen poured billions into their own electric vehicles. Chinese companies like BYD started selling cheaper electric cars that threatened Tesla's position as the market leader. SpaceX faced similar pressure. Companies like Blue Origin, owned by Jeff Bezos, and Rocket Lab started winning contracts that might have gone to SpaceX in the past. Even national space programs from China and India began offering cheaper launch options for satellites. The overall economy didn't help either. Rising interest rates meant people thought twice before buying expensive cars. Higher loan costs made Teslas less affordable for average buyers. Meanwhile, inflation drove up the price of materials needed to build rockets and spacecraft. The global supply chain, the system that moves parts and materials around the world, still hadn't fully recovered from problems caused during the pandemic. Computer chips, battery materials, and specialized metals all remained hard to get and expensive. Public perception shifted too. After years of positive news coverage, both Tesla and SpaceX faced more critical reporting. Safety concerns about Tesla's self-driving features got more attention. SpaceX's Starship rocket explosions, though part of normal testing, generated negative headlines. Social media, once Musk's favorite tool for free publicity, became a double-edged sword. His controversial posts and political comments drove away some Tesla customers who didn't share his views. Weather events also played a surprising role. Severe storms damaged a key Tesla factory in Texas, while unusual launch conditions delayed several important SpaceX missions. Energy prices spiked globally, affecting both companies. Tesla's gigafactories use massive amounts of electricity, while SpaceX needs specialized fuels for its rockets. Despite all these challenges, some factors worked in the company's favor. Government incentives for clean energy helped keep Tesla sales from falling even further. NASA's continued support for SpaceX provided stable funding during uncertain times. The companies also benefited from their strong brand loyalty. Many customers and investors stuck with Tesla and SpaceX despite the troubles, believing in their long-term vision. As one industry analyst put it, the external challenges facing Musk companies are real and serious. But unlike many businesses facing similar pressures, Tesla and SpaceX have passionate supporters who believe these companies are changing the world. That kind of loyalty buys time to weather the storm.